everyone. I'm Sarthika Palekar. Uh, I'm pursuing MBA in Alliance University in finance. So, this video on a financial modeling using Excel. Today, I'll be demonstrating a SaaS software as a service company financial model using the Graphite financial template. This is the professional Excel model. What I'm going to uh, introducing here. Excel model helps us to forecast revenues, cost, profit, cash flows for a subscription based businesses. Let's explore each sheet step by step, understand how they work together. Okay, the first sheet is here, step 1, P&L, profit and loss mapping. Let's go through this. First, we'll see the quick start. Okay, the first sheet called the quick start acts as a guide or an overview of a model. There are the 6 or 7 steps. Okay, it gives the instructions on how to use the workbook, starting from a setting assumptions, building revenue and the expenses, and the generating financial statements. This statement ensures users understand the sequence in which the navigate the model from step 1 through the step 6. Okay, think of this sheet as your model roadmap. Let's go to the step 1, P&L mapping. Moving to the step 1, P&L. P&L means profit and loss mapping. This sheet defines how various revenues and the expenses accounts are mapped to the profit and loss statements. It creates consistency between the operational data um, and the accounting outputs. Here you can see uh, gross profit, total income. It gradually increasing. Okay, and total sales also increasing. The gross profit is also increasing, gradual increases here, but these all expenses are remain same while go through till 29th of 24. Okay, total expenses also here, and net income is here. It creates the consistency between the operational data and the accounting outputs. Each revenue and the cost category is assigned to line items that later appear in the income statement. This ensures all assumptions from the future sheets flow correctly into the financial outputs. Let's go to the step 2, balance sheet mapping. The balance sheet mapping sheet or a step 2 defines the structure of a balance sheet. This is the structure of a balance sheet where includes all assets, prepaid expenses, current assets, fixed assets, all expenditures, other assets, liabilities, payables, revenue, credits, all of this which is mandatory to uh, take accuracy of a financial summary. It's very mandatory that balance sheet should be maintained. This sheet makes sure that all the accounts balance correctly when we move into the projection. A key check for any second financial model. Okay, and step 3, that is the basic assumptions. I just want to note here point that let you can see here uh, in total account receivable there is a same currencies here, that is $1 lakh. Even also the total prepared expenses is also the same, the other current is also the same go over a year, but the total current assets are changed here, they are decreasing. See, they are decreasing till here, and then after it's 59, right? It's 59, then after it's also uh, decreasing, right? Just because of the total current assets. See, the total machinery equipment expense is also the same, even though the total furniture fixture almost same. See, let's very mild uh, changes here, just because of the total current assets. Here is the total asset changes will be there, right? This is the what's the reason, why is it this changes happens here, this decreasement is happens here, that is because of the total current assets. Go through this. uh, this is the same what it happens here. Okay, 49,000, 49,000, all around the year it will be same. Let's go to the step 3, basic assumptions. Okay, this is the step 3. The first date of operation is Jan 2023 to latest month or actual model till now, that is the Feb 2024. Okay, gross margin is the 70%. In 2023 2024 it is at 75%. It's increasing, right? The assumption in 2026 is 79%. It's very good. Cash recipient, the first month is 60%, 30%, and it's gradually decreasing. Here it will be same. Then cash disbursement, sorry, that is the 100. Here is 100%, and then after in second month there is the payment terms are at 25%, existing AP is a 50%. Then after the payroll and the capex, here it is the percentage wise depreciation month is 36. So the basic assumption sheet is a foundation of an entire model. Here you'll input the company level parameters such as the start date projection, um, first date, that is the start date, and the currency, and also the inflation or a growth assumptions, tax rate, discount rate of a valuation, and the starting cash balance in the loan terms. These inputs act as a control panel of the model, changing any of these automatically. Model calculations across all sheets. It's crucial to ensure the realistic and the consistent assumptions here. Let's move toward the step 4, that is a payroll. Next, the which payrolls calculates all employee related expenses. The model typically lists the departments such as the sales, that is general, marketing, research and the development people's also here, general and administration. The subgroups also here, start date, what is the start date of that employee, who is the founder of that employee, USA, what is the location, and they are active or they are not active, what it is here, the initial salary when they'll join in that company, the number of employees, average salary of the hourly rate, hiring date and the growth rate, benefits and the taxes. This sheet then projects total payroll cost monthly by month and sends the total into the expense sections of the income statement. Okay, let's move towards the step 5. I'll zoom it out little bit. The clients and the pipe sheet defines company's customer structure. For a SaaS company, customers are the core revenue driver here. Here we enter the assumptions like a number of starting clients, new clients acquired monthly, churn rate, customer lost, and the pipeline conversation rate. Okay, this sheet is the crucial because it forms the base of a revenue forecasting, showing how the client base evolves over a time. This is company name, the status is here, and the percentage, while what is the change in between this. There are the three stages: revenue by stage, enterprise by stage, mid by stage. These are the stages. Existing client, these are here. Over a period of a year, this still this is 23 to 24, I guess. So this is all about the client's pipe. Let's move toward the step 6, projected revenue. Projected revenue. This is also from Jan 23 to okay, December 27. It's on the monthly basis. The prediction is also there, right? The projected revenue sheets builds upon the client data to forecast monthly and the annual revenues. For each customer cohort, the model multiplies the number of active clients by the average contract value, or a ARPU. The formula follows the logic, that is, revenue equals to uh, active clients into the price per subscription into the duration. Okay, this sheet may also include the upsell rates and discount assumptions. um, this projection feeds directly into the income statement, driving the top line of this business. Okay, this is a brief all about the projected revenue. The main important crucial is the next step, that is the financial summary, which gives the close view all about the company. And if you want to analyze that company, this is the crucial, that is a financial summary. What here, um, which shows the condition of that company. On the basis of this financial summary, will take decisions of the in that company also. If this is a competition of that another company, so this is also good for that. So basically, financial summary is the very important. The financial summary sheets consolidates the result from all steps: revenue, payroll, expenses, and the um, investments. Here it is the revenue, uh, gross margin, and gross profit, expenses, EBITDA, net profit, and the cash flow over a time. Here is the cash flow. Other metrics is, um, this is the main dashboard. Decision makers look at the axis performance, right? This is the performance on the basis of an annual report. Here it is, and it is quarterly wise, which gives a clear which gives the clear um, view of that company. But monthly is also there till okay, till 27. So there is a prediction is also there, right? So let's move toward the summary charts. These charts are important who didn't get the financial summary, but if you want a like close one check view, this is the best for that. So revenue projection, which gives the very important um, judgment of that company, what is the condition of that company. If you can see here, there is no change in this red lines and the blue lines, which are the projected existing customers are the same till 23, and the projected pipeline is also same, not that much change. Only in January 23 it will be little more, but after that from February it will be go down, but and remain still remains same, right? After that, here is a change is only in the projected post pipeline, which is in green color. It's a very huge change here. There is many reasons behind that, what why is this change is here. Second, other one is the pipe details. You can see here, this blue line red line is almost no, there is accurate no change in that. But there is one in 21st of Jan, there is a green color line is there, sent contract, which are 5. So this is a change here. Other than, there is no send contract is here. And after this light blue color and the orange color shows the sent proposal and had meeting respectively. So there is a no change in this also. Finally, we'll go to the summary charts. Sorry, income statement. Income statement is very crucial in this. Let's talk about the income statement. Okay, the income statement sheets complies all revenues and expenses, or to calculate profitability. It includes the total revenue, cost of goods sold, then gross profit, operation expenses, and the EBITDA, then net incomes, depreciation, taxes, and all of this is included in this income statement. You can see here, you can see here in 2024 it is EBITDA is 9,70,789, but it increasingly increases very not the difference of increase is very big, not gradually increasing, very big increasing in that. The operating expenses also increasing yearly, until they are predicting in 2027 it will be the 56,85,863, but here in 2023 17,000, after 26 39 and 49. That this happens in every businesses, of what I am guessing, because when business is increasing, so of course the operating system is also increasing, the expenses also increasing because the expansion of that business, right? This is the company's monthly and the annually is also there. This is a monthly basis, and this is the annual, this side is annual view. Show how the efficient the business converts the profit into the revenue into the profit, right? Balance sheet. The balance sheet shows, next we'll move towards the balance sheet. Balance sheet, the balance sheet shows the company's financial positions, assets, liabilities, equities. It includes cash, receivables, property, payables, and the loans. This ensures that the model balance total assets equal into the liabilities plus equity, confirms accounting accuracy. Okay. mm, Current assets, fixed assets, other assets. This is very detailed financial summary of this company, very detailed. Long term debt, total liabilities, this is all about that. I'm very I think it's on a monthly basis also, and quarterly, this is a quarterly basis. Yeah, this is all about the quarterly. This is all about the quarterly. This this is what the balance sheets look like. Next, move over the cash flow statement. What is the in or out, right? There are many expenses. mm, so this is all about the cash flow sheets, shows the how money moves in and out of the business. mm, Cash flow from investing activities, cash flow from financial activities, uh, and the cash flow investing, yeah, cash flow from the operating activities. There is a very big amount of operating activities, right? Cash flow, uh, total cash flow is here, not that much difference till 2023, but after 2023 it will be, look at this. I don't know the reason, what is the reason, but why here it is very low, right? But this is what the cash flow is here. Next, move towards the capex. The it's supporting sheets where you can adjust the items like a software cost, rent, office supplies, and the customer support tools. um, the capex sheet records all the capital expenditures such as the capital expenditure, equipment, servers, and the software licenses. Okay, these values get depreciated over a time and reflected on the both the balance sheet and the income statement. Over a time it will be depreciated because the once we buy the computers, equipments, वगैरह, but it till long lasting, so it it will be usable over a period of a time. So after some time it will be depreciating, so it will affect in the income statement also. Next, move toward the capital rising. Okay. The capital rising sheets track funding events like seed or series A rounds. Mm, you can input invested accounts, equity percentage, or a debt terms. It shows how capital injections impact cash balance and the ownership structures. Um, Account receivables also here. So differences between the sales and the cash collections of expense payments. That ensures the model reflects real world delays between the invoicing and the actual cash flow. Let's move toward the model logic test in the list. The model logic test in is in this list, which tells use to the internal checks. It verifies the formulas, ensures the financial statements, balances, and the flags any circular references or a mismatches. The list sheet stored the drop down menus, data, and the validation and the category names used throughout the workbook. Okay, but here it is zero logic sound because cash flow logic is broken. The cash balance on the balance sheet doesn't equal the cash balance on a cash flow. The most thousand common causes of this is the cash balance on the balance sheet being hard coded. So please check the model, try to step 2. Okay, SAS list summary. I'll giving a summary of a SAS list. Finally, um, Finally, the SAS list sheet is the reference library for a SAS specific and the benchmark like typical churn rate, CLTV ratios, and the pricing standards. All these sheets together form a complete financial model, from raw assumptions to the visual dashboards and the valuation matrices. Mm, the kind of a model is idea for the startup analyst and the investors to make a data driven business decisions. This is for on the basis of this model only the startup businesses and all who want to invest in that company, who want to buy the shares and all, on the basis of this model only they take the decisions. uh, so finally this is all about the model of SAS. um, and thank you for watching. I hope this work through gave you a clear understanding of how a professional SaaS financial model works in Excels. Don't forget to like, share, and subscribe for more financial tutorials. And thank you for watching again. And this is all about the SaaS. Uh, Keep in mind this is very important while taking the decisions of a company to investment, to buy the shares, to put a valuation. uh, Make sense for this. So thank you for watching again. Like, share, and subscribe.